Hello, today is Sunday, September 28th of 2025. I'm Jason Shapiro with creditmarketreport.com. So it being the end of the quarter, we get to go take a look at what we have been calling our Don't Trade Fade portfolio, where we put together a bunch of portfolios at the beginning of the year, and we just track how they do relative to the market and all that to see if it gives us any hints as to where we might be able to find edge, who we might be able to fade, and what kind of market environment we're in, basically. So let's get right to it, shall we? This is the first portfolio, which was all the picks from the Barron's Roundtable. The Barron's Roundtable is done at the beginning of every year. Some of the most well-known and most respected stock pickers out there give these picks. Last year, I believe this portfolio underperformed the S&P by 20%. And this year, it looks like it's sort of right on the market. It was beating the market earlier in the year, and now it has fallen recently relative to the market, and it's just below market a little bit. So the very well-financed, very well-educated people with great models and all this, and great teams of people to be able to do all kinds of research, are underperforming the market this year by a slight amount and underperformed by 20% last year. So over the 1 3/4 years, they're down about 21% versus the S&P. Not very impressive. So that's that. The next one was the CNBC acronym. So these CNBC people give on the Fade Money show, give an acronym where they pick 4 or 5 stocks for the year. We took all of them that everybody did and made a portfolio. And I consider these people to be sort of retail traders, personally, based on the way that they view the market and all that. So they were kind of even with the market, and then since the big rip up, they've outperformed. They've outperformed the market, from what I can tell, by 7% on the year, and that's pretty good, 7%. And I think that this indicates the type of market we're in. Where it's almost like the less knowledge you have, the better you're going to do. You just got to jump in. This is where we're seeing people talking about how retail is crushing institutional investors this year. And I think this is where it shows up. This is the ultimate institutional investors. It's Barron Roundtable. They're flat to the market at best. And this is sort of, like I think, more of a retail type of thing. And they're beating the market by 7%. I think that indicates exactly where we're at here. This is what we hear all year, and this is what is showing up here. Then we have our favorite CNBC fade, which is Dan Nathan. We separate him out because he's just a special fade. And if you follow along with Dan Nathan's actual trades on the CNBC website, he's, as per usual, losing on almost every trade. He's made on a few, but overall he's really gotten killed. But his portfolio has been pretty volatile, has underperformed the market most of the year, but just recently took off. And I would say that's because of this EA. EA was bought out, and also the Intel thing that happened. Those two things really recently have really jacked him up. But I mean, he was underperforming by quite a bit as recently as a month ago. And now he is outperforming. He's the hero of everything. Look, he's doubled the market return now. So again, like I say, the less you know about markets, the better you seem to be doing this year. And here's more proof, because Dan Nathan, in my view at least, knows nothing about how markets actually work. He knows a lot about how to talk about sort of very consensus ideas. He's been bearish, ever since I've known him, or ever since I've seen him, which is going back to 2009. But despite that, his stock picks have done well because, again, like I say, this Intel thing worked out very well for him. And this EA buyout thing worked out very well for him. So go Dan. You're crushing it, buddy. Prove me wrong. His volatility has been a little bit much relative to the market. So I don't know if he's vol-adjusted outperformed, but he probably has, given that he's doubled the market return. And then you have, we just like to do random picks. So the most random thing you do, here you go, alphabetical, right? And by the way, it all starts with the fact that Barron selected 39 stocks in the end. So we just selected 39 stocks, the first 39 alphabetical stocks. And this did relatively well. It beat all the other things last year, but this year is doing the worst. So I know that says a lot. It's just a random pick just to see how randomness does. And last year randomness did well. This year randomness does not do quite as well. I don't know if you can read very much into that one. And then we got the ChatGPT, who actually was the best performing. I would say this alphabetical thing was the second best performing portfolio last year of these. And this year, ChatGPT was the best performing portfolio last year. Still did not beat the S&P, but the other ones got crushed so badly by the S&P, which was indicative of the fact that the market was not very broad last year, right? The S&P beat everything because the 7 stocks that were pushing the S&P, beat everything. Whereas this year we're getting a much more broader market, so there's a chance for people to beat the S&P. ChatGPT is in fact beating the S&P this year by 8%. And I would argue, I don't remember the exact number from last year, but it only underperformed by a little bit. So I think for the year and 3 quarters that we've been doing this ChatGPT portfolio is actually beating the S&P. What does that tell you? Here comes AI to take all of our jobs, right? It certainly should be taking the Barron Roundtable jobs. Because like I say, this thing's outperformed the S&P for 18 months, and Barron Roundtable's underperformed the S&P by 20% for 18 months. So the first thing they should do is fire all these people and just go to ChatGPT and say, give me a random number of 37 stocks for this year. Because that beats them. Okay, it's pretty simple. And I know it's only a year and 3 quarters, but that's why I like to do this. We're going to keep going, and we'll see over time if this continues to be the case. And if it does continue to be the case, will these people actually make the efficient decision to stop hiring people from business school, shut off their models, turn off their computers, and just let ChatGPT select best stocks, if that works? Will they be efficient and do that? My guess is no, but let's see how it continues to go, and let's see where the business goes to if that should happen. Okay? So that's really kind of it. Sort of some interesting stuff here. Another shout out to Dan Nathan. I rag on him all the time, but look, he is the number 1 performer in this. So go Dan, go. All right. And other than that, I hope people enjoy that. Just a little entertainment and maybe some knowledge in there. And I hope everyone's doing all right out there. All right. We'll talk again next week. Thank you. Hi, I just wanted to say, if you like daily videos, we do them 4 days a week, Monday through Thursday, for people, and it costs, $10 a month. And I try to include a lot of other lessons as I go through, as you see in the daily videos as well. For that $10 a month, you also get our COT charts on equity indices and crypto. So if you think that's worth it, give it a shot. All right. And we hope to see you there. Thanks.